Greetings, everybody.
Good morning.
And welcome to the, good morning. Great to see you. That's a gorgeous flower behind you, Leslie. So thank you for bringing some beauty to us. And greetings to everybody, and welcome to the Vet Partners Town Hall Brief, where we share rich information in a short amount of time. Now, before we get started on today's topic, I've got a few items to share. First of all, thank you to all of our sponsors. We are so grateful and appreciative for all of your support. We can't do many things without you. Thank you. Next, all lines will be muted, so we may focus on our presenter and the discussion. Please stay on mute until we open it up for questions at the end. And if you do have questions, please place them in the chat box, and we will address as many questions as we possibly can after the webinar is finished. Now, if we don't get to all the questions, we will make sure we address them offline. So thank you and be patient. You'll definitely receive an answer. Now, today's topic. It's no longer business as usual, the CARES Act, and more. Today, we will learn about COVID-19 pay, grants, loans, what the SBA has to say about PPP loan forgiveness, and what additional CARES Act provisions are available for small businesses. Now about our presenter, Cammi Bailey. Welcome, Cammi Bailey. I'm going to say a few things about you. You're a founder and president of Camala C Bailey CPA PC, a certified public accounting and financial services firm in Tempe, Arizona, and is also known as the CPA for vets. Her firm serves veterinary clients throughout the United States and is known nationally for its expertise in veterinary accounting, tax planning and preparation, practice valuation, and due diligence work. A lot. On an interesting note, in Cammi's leisure time, before the pandemic, and yes, indeed, there was a time before the pandemic, you could find Cammi traveling and photographing the world with her husband, Randy. Since the pandemic, you'll find Cammi at her desk helping clients through the maze of new legislation, and I do believe we have some hot off the press announcements today. Cammi, welcome. The floor is all yours.
Thank you, Deb. And hi to all my Vet Partner members. Thanks for joining us today. And it definitely is no longer business as usual. This is me. You guys all know me. So just if you want my contact information, grab it here, or you can go on the Vet Partners website. My agenda today is, and I'm going to have to make this really quick, I'm going to talk very quickly about COVID-19 pay. I'm going to talk about the SBA loan programs. I'm going to talk about Paycheck Protection Program Flexibility Act, HR 7010, which is literally hot off the presses, and the CARES Act small business provisions that help veterinary practices in addition. So let's get started with what I call COVID-19 pay, because if you say Families First Coronavirus Response Act, we will use up our 25 to 30 minutes very, very quickly. So what came out of the CARES Act and COVID-19 pay is that businesses with under 500 employees are required to pay for emergency paid sick leave. There are 6 reasons that they would be required to pay for emergency paid sick leave. And you can see here on the slide that there's care for self and there's care for others. There's 3 reasons under care for self. The first is subject to a government quarantine. The second is you are advised by a healthcare provider to self-quarantine. And the third is you're experiencing symptoms and seeking medical diagnosis. So if you have an employee that is under the subject to any of 3 of these, you are required to pay them. The other is care for others. And if you have an individual who is under an order, as described in 1 or 2 above, that you're caring for, you're required to pay them. If you have an employee who has a son or daughter and their school is closed or their care facility is closed or their care provider is unavailable, you are required to pay them. And the last one is if the person has somebody that they're caring for that is experiencing substantially similar conditions to COVID-19, you are required to pay them. This all came down as of April 1, 2020, and will be going through December 31, 2020. So EPSLA, Emergency Paid Sick Leave, is April 1 through December 31st. In addition, there is the Family Medical Leave Act. Eligible employees may take up to 12 weeks of family medical leave. Now, this has been here for a long time, but what changed here is if somebody is unable to work or telework because they must care for a son or daughter under the age of 18, the need for leave must be caused by school closing or child care provider unavailable due to COVID-19, then this is where that falls, and you must pay them under the Expanded Family Leave Act. Now, what's important here is the child care provider means a provider who receives compensation for providing child care services on a regular basis. It can't just be a relative or somebody like that. So that's an important thing to note here. So how does this all work? So the EPSLA pay data, full pay for 1 through 3 for care for yourself is capped at $511 per day. So you pay full pay to somebody who's caring for themselves up to $511 per day for a total of $5,110. If it's care for others, it's paid at 2/3 pay and capped at $200 per day for a total of $2,000. Now, it's important to note that employees are eligible immediately. In other words, they don't have to work for you for 30 days or a week or whatever. They're eligible immediately. And this is in addition to any other sick leave that you offer. Now, if you have a part-time person, you take part-time employees, their average number of hours in a 2-week period by looking back at the prior 6-month average. For full-time employees, it's 80 hours. So everybody is paid 80 hours if they have that many sick hours. Under the Expanded Family Medical Leave Act, the pay only applies to number 5, where the person is taking care of a son or daughter under 18 and school or a provider is not available, care provider is not available. And they can receive up to an additional 10 weeks of pay. They get the first 2 weeks as EPSLA pay, and then the remainder 10 weeks as expanded FMLA pay. Now, FMLA did not change. There's still 12 weeks of FMLA pay available total. And this pay is only available to people who have employees who have worked 30 calendar days of employment. And it is paid at 2/3 pay for a total of $200 per day for a maximum of $10,000 over the 10-week period. So it's important to note that the Department of Labor issued a poster, and it's required to be posted by April 1st, 2020. So hopefully all of your clients have done that. Another thing that's important to know about is there is a payroll tax credit that is dollar for dollar for COVID-19 wages paid. It gets a little muddy if you have a PPP loan. At the same time, so be sure and get clarity on that. I'm not going to go into the details here because I don't have time. But if you do have COVID-19 pay or your clients have COVID-19 pay, it's very, very important to document, because you're going to need to back up your credits with your documentation. And resources, some really good resources are going to the Department of Labor, of course, to the Internal Revenue Service, and call on your accountants and your payroll service. Many of the payroll services are helping a great deal with this. Okay, well, you'd have to be living under a rock if you haven't heard about the SBA loans. And of course, if you know about SBA loans, you know about the PPP, Paycheck Protection Program. And that's a program that provides loan forgiveness for retaining your employees. And we'll get into details of that a little bit later. also available was the EIDL, Economic Injury Disaster Loan. And I had several of my clients apply for this, and they actually got the advance, and some of them have received the loan. What I've done, the research that I've done says that the advance does not have to be repaid, but it does reduce, if they also receive the PPP loan, the forgiveness on the PPP loan. So make note of that. So what happened is on the advance, you can get up to $10,000 of economic relief to businesses. After the big rush of SBA loans, the PPP loans, et cetera, they kind of ran out of money for the EIDL loans. So what they've done now is only made it available for agricultural businesses. So they're no longer available to everybody. Another loan that's available is the SBA Express Bridge loans. And if a client has a relationship with an SBA lender and they're in dire straits, they can work with that lender to access $25,000 very quickly. Another one that probably a lot of you are familiar with is the SBA debt relief. And basically what the SBA is doing is they're paying 6 months of principal, interest, and fees on SBA 7A, 504, and micro loans for our clients. And those are on new loan, even on new loans dispersed prior to September 27, 2020. And I have a couple of clients who are in startup mode and are trying to get their loans prior to that to take advantage of this. And what's really great is this is just automatic. It's automatically happening. You don't have to apply for it or anything. So let's talk about PPP Loan Forgiveness. That's the top of my list. The media, I'll tell you, the media has been ugly. And I just decided I'm not going to pay attention to a lot of what I see out there. There's so much controversy. Small businesses should focus on the PPP's intent and keep using the funds. I know that, there's been a lot about wondering if people should give back the money. They're worried that they took it in ill faith, yada, yada, yada. The AICPA, Baron Melicon, wrote the president and CEO of the AICPA wrote a letter, and I'm going to just very quickly read it. I have time here. The speed at which so many small businesses access PPP loans reflects a commitment to staying open, keeping employees paid, and serving their community. Yes, there have been bumps in the road. Challenges are expected for a program of this magnitude and speed at which it was made available. Since the launch of the PPP in April, the SBA has processed nearly 4 million loans, totaling more than $500 billion, an extraordinary feat. Unfortunately, the pendulum has shifted from can-do optimism to, for some, moral outrage. Now, millions of small businesses feel pressured to return money they receive or question whether they should apply for PPP funds. Business see that PPP funds as important to keeping employees and remaining viable, should not be concerned about keeping or applying for the funds. We are in unprecedented and uncharted times, and the journey ahead will have many challenges, most of which cannot be fully seen today. So with the unknown future, there's no reason not to be applying for the PPP funds, and there still are funds available. So I'm with Barry. I say, if you've gotten the funds, use them the way you're supposed to be using them. If you haven't, apply for them. It's okay, because that's what they're there for. So there was guidance released from the SBA on May 15th. It was 11 pages of what I called mud, because it was very complicated and convoluted, and I'm still trying to figure out exactly what they want. But in the meantime, the Congress decided to put forth HR 7010, which is called the Paycheck Protection Program Flexibility Act of 2020, which passed the House on May 28th with a vote of 417-1. Yay. The Senate approved it June 3rd. And as I am speaking, literally, Deb and Elizabeth and I were talking, the president signed it today. So changes are afoot. I don't even know if I want to go through this, but I will very, very quickly. This is how the original forgiveness was. You were to track your eligible costs incurred and paid during the 8-week period following the loan funding, and that included payroll, rent, mortgage interest on real and personal property, and utilities. There was some question on what utilities included, like did it include telephone and internet, and we've all concluded that yes, it does. You were to calculate your payroll costs for forgiveness floor. 75% of eligible costs are to be used for payroll. If less, then the forgiveness is reduced proportionally. You are to calculate any percentage decrease in full-time equivalents from your 8-week covered period. So if you had a decrease in your full-time equivalents, you would have a decrease in your forgiveness. Very complicated calculations. You would calculate any reduction in payroll. You weren't allowed to include payroll for anybody paid over 100,000. You had to reduce it down to 100,000. And of course, veterinarians often are paid more than 100,000, so that took some calculating. And was any pay paid to a person, and this is by employee, less than 25% from a prior period, then you would also have to reduce it. Again, very complicated calculations, let me tell you. And then you would, if you were able to bring everybody back up by June 30th and restore it all, you could skip step 3 and 4, yippee. But for businesses like restaurants and such, it could be difficult for them to do that. So that's the original way. Oh, and I have something to note. So the whole thing started out that this was going to be tax-free. But unfortunately, there's some not so good news about all this. Revenue Notice 2020-32 came in, and it was released April 30. And it said, expenses paid by forgiven portion of PPP loans will be considered non-deductible for tax purposes. So in other words, the bottom line is the PPP loans ultimately end up being not tax-free. Bait and switch, in my opinion, but so be it. You still get the money beyond the tax that you pay. So that's how it works. Now let's talk about HR 7010. Change number 1. Borrowers can extend the 8-week period to 24 weeks. Now, from my understanding, they can elect to use the 8 weeks if they want, or 24 weeks if the loan is outstanding at the time the legislation is enacted. So when I look at veterinarians, which of course is all of our clients, it looks like they will be able to use their loan all for payroll and won't even have to mess with all of the other rent, utilities, etc. So that's how this'll flush out in the end, in my opinion. The 75% payroll test is changed to 60%. So you only have to use 60% for payroll, but in actuality, I think we'll be able to probably use 100% for payroll. Penalties and calculations for the reduction in workforce are now changed from June 30th to December 31st. So as long as you get everybody back up to where you need them to be by the end of the year, you can ignore step 3 and 4 as in the prior one. So that will give hopefully a good chance to the restaurants and bars, if things come around, to be able to get the forgiveness. And if you tried to rehire but couldn't, exception is, and this is happening, I know if you are looking in the media, you see this where people are trying to hire and they can't get people to come back to work because unemployment is more money than coming back to work. So if you couldn't find qualified employees, or you couldn't restore business to comparable level because of social distancing or other federal health guidance, you can use that exception to help with the forgiveness and for getting people back, get your full-time equivalents back or your payroll up. And then the repayment period, this is nice, is extended from a 2-year term to a 5-year term. So the payments are gonna, if you do end up not having as much forgiven, it won't be as large a payments that are going to be due. The 1% interest rate still remains, which is a heck of a deal. And then the 2-year deferral of the employer's share of payroll tax allowed, whether or not you've received your PPP loan forgiveness. So this is one of the benefits that the CARES Act gave, but prior to HR 7010, you couldn't defer the employer's share of payroll taxes if you received a PPP loan. Now you are allowed to do that. So this is the additional small business help that's in the CARES Act. That's the delay of payment that I just talked about, where you can take half of the 2020 employer share of Social Security tax, which is the 6.2% you pay as an employer, and pay it as late as December 31st, 2021, and then the other remaining half by December 31st, 2022. So you can postpone paying your employer payroll taxes even if you have a PPP loan. The other is an employee retention credit. Now, what you get here is a refundable tax credit of 50% of wages paid by an eligible employer up to $10,000 per employee whose business has been financially impacted by COVID. And this is either because they were closed partially or fully due to government orders, or they've had a significant decline in gross receipts compared to the same period the previous year. It's, again, sort of a complicated calculation, and you have to track it very carefully. But if somebody that you work with didn't get a PPP loan and their business is down substantially, they can get this employee retention credit, because the retention credit is not available if somebody received a PPP loan. So those are the things that are available through the CARES Act that help small businesses. So what's up? Of course, there's a lot going on. The banks are going to be really looking at the forgiveness information when it's given to them, because the SBA is going to be on their back to make sure that it's legitimate. A lot of the businesses are afraid to apply for PPP loans because of all of the media and the hullabaloo about it. But like I said, Barry and I are on the same page. I think if a business feels, how can the COVID not affect any business? So if it's legitimate, please, go and get your PPP loan. The other thing that I think is very interesting is I'm on a bank board, and I try to stay in pretty close touch with my president. And I emailed him the other day when the 7010 passed the Senate, and he said that the banks are really lobbying to have automatic forgiveness for smaller PPP loans, like 150,000 and below. I don't know how strong the lobby for banks are. I think it's fairly strong. I would love to see something like that, because the majority of my clients' loans are less than 150,000. I have some that are more, but a lot of them are less. We worked on a PPP loan actually a couple days ago, and by the time we were done, we had paperwork that was probably about half an inch, and it took us about 4 to 5 hours to work through it. So if you figure, putting it together took that time, and then the banks have to look at it, and then the SBA has to review it. By the time you do that for however many bunches of loans there is, I know my little community bank did loans as small as $3,000. If you figure you have loans that are $3,000 up to, millions and millions of dollars, that's a lot of paperwork, and that's a lot of time. So I hope that the lobbyists at the banks are able to get some type of automatic forgiveness for the smaller loans. But the big news is the president's finally signed the HR 7010, and we do have the longer period. One thing that kind of pops out with that is if people do wait until the end of the year to figure out and apply for forgiveness, we're going into 2021, and with the taxes, does that mean that we take what do we do with taxes? Because the tax return could be due before we even know if we get forgiveness. So do we not take the expenses? Do we take the expenses? This is why it's a headache. So with that, I will open for questions.
Cammi, unbelievable. Thank you so much. All I have to say is thank goodness for our financial folks, our CPA folks and vet partners. And I don't know how you do it or if you even sleep at all. So again, thank you so much. We do, Elizabeth, I'm gonna punt this to you. Do we have any questions from our attendees?
We do have one from Monica. Monica, would you like to jump, unmute and answer?
Sure.
Okay.
Hi, Cammi. How are you?
Good.
So I was wondering, I think I know the answer to it, but it came up with a client situation. So with the FFFCRA, does it address the issue of when a employee's daycare school does open up, but a parent is very concerned about sending their child or children back into those environments? If they're in a considered like a hot spot or just a high, occurrence of coronavirus diagnoses or something like that, does the law protect this type of scenario, or is the parent simply out of luck and expected to return to work and take their child to those said establishments?
We've had that situation as well. And from everything that we've read, the parent's kind of out of luck because there is daycare available. So, it's a choice that the parent is making. It's an unfortunate choice if they're really uncomfortable with that, but they do have the ability to have the daycare. So, yeah, not pretty,
Yeah.
Yeah.
I figured as much, but I thought I would just, if you knew something that I didn't, so.
No, that's the way it is.
Thank you.
Thank you, Monica, and thank you, Monica and Cammi. I think we've got time at least for one more. Elizabeth, who's up next?
Elise, do you want to unmute and ask your question?
You could speak on my behalf, but anyway, Cammi, curiosity about the deductibility of the expenses. Anything new on that?
Well, the IRS has spoken, and so is Munchin, or however you say, the Treasury Department head. I don't think that that's going to change. I think that they're going to be non-deductible. The forgiveness portion of the expenses are going to be non-deductible. I wish they would make it simpler and just say the forgiveness is taxable instead. Because I think doing the tax returns and trying to parse out all of the payroll and the utilities and the, blah, blah, blah is going to be a pain in the rear. But basically, it just means it's going to be taxable. And I don't think that's going to change, unfortunately.
Well, get your friend Barry to send another letter.
Yeah, there you go. Believe me, they have. I've been trying to read all the AICPA stuff, and they're lobbying too. Lots of lobbying going on right now, let me tell you.
Thank you, Elise. And again, thank you, Cammi. And I think we've got time for one more, Elizabeth. What's the question?
Pam, do you want to jump on and ask your question? You want me to read it?
I got it. Here we go. I had a client ask me this morning, now that it's 24 weeks, can they fill out their PPP forgiveness application and submit it as soon as they've spent their 80 grand that they got, or do they have to wait?
No, they don't have to wait. They can put it in as soon as they've spent their money and have documented everything. They do not have to wait until December 31st or the 24-week period. I guess I would caution and say wait until the dust settles to make sure that everything is being calculated properly, because now that the 7010 has come through, there may be some changes on how things are calculated. Maybe some clarity will come through. So I wouldn't rush, but it can be turned in at any time. It can, and in fact, if somebody actually spent it under the 8-week, they can choose the 8-week or the 24-week too. So
yeah, they because of the change, they're just going to do what you had just suggested. Is they're going to just apply 100% of its payroll, so that they don't have to keep all the records for utilities and rent and all that stuff.
Yeah. and that'll work fine.
They'll be done, before the 24 weeks. They'll be done around 12 weeks. So they just didn't want having to do that record keeping any longer than necessary.
I don't think they have to. No.
Thank you. This is
Okay.
great.
Thank you, Pam, for that question. And everybody, thank you for your questions. And I believe we've got some more in queue that we will make sure we get addressed, everybody. So thank you very much. It's time to wrap up our session today and move forward into learning more about our loan forgiveness, if we wish. And I'm sure that Cammi will keep us up on what's going on along the way. So again, thank you so much, Cammi, for this very valuable presentation and information that you shared. So again, if you have any questions, I see again, we've got some still in queue. If you have further questions, please email them to admin@vetpartners.org. That's admin@vetpartners.org, and we'll make sure that everybody gets an answer. Again, many thanks to our sponsors. I can't say that enough. Many thanks to our sponsors for helping us do all the things we believe is good for our profession. The recording of this webinar will be placed on our website next week. Stay tuned for future Vet Partners Town Hall briefs coming your way soon. And thank you all for tuning in and for all that you do for our profession. Until next time, stay healthy, stay happy, and stay safe, my friends. Thank you very much.
Bye, all.
Great to
Bye,
see you.
everybody.